Aloha, everyone. Welcome to Java. Thank you all for joining me again. This is Wednesday, September 27th, 2023. I've got quite a bit to go over and really going to hit on some digital currencies towards the end of this. So if you want to stay past the market parts, we are in a super high risk area, extreme. 297.7, and this is actually down a bit from what it was yesterday. We watched the markets really take a beating. So, what happened was the dollar got stronger, the sentiment is coming down. So, with the dollar breakout and a stronger dollar, it makes stock prices appear weaker or it takes down the prices of stocks, relatively speaking. So, we had not only the dollar, but also yesterday the 10-year yield both rose. So now the 10-year yield is starting to hit its resistance. And if that pulls back a bit, as well as the dollar index, stock prices can be strong again and the markets will recover for a bit. So have to urge a little caution here. However, we could watch some institutional selling coming in here as the price points are now hitting to where it is triggering what we call machine selling, or by the algos of the larger money, which is the pension funds and your larger um, hedge fund managers that start coming in. So the problem with this, though, is I'm a contrarian and we're watching everybody kind of go to the other side of the boat where everybody is bearish. And we are watching these heading into resistance levels, the dollar and the 10-year yield. So I suggest watching those if you're doing day trading because they will have an overall effect on that market. Today for the calendar, we're expecting the largest possible movers are core durable goods numbers, and we're also watching crude oil inventories. So we're going to watch what happens with crude. So oil kind of retraced on its price for a little bit. It's kind of consolidating here, hanging a bit. We can see what happens with these numbers today. The supply is still being constricted, and for the long term, having oil higher does support higher inflation. So we will continue to see inflation as long as this continues with the prices. So the other thing that they're talking about, the rates staying higher for longer, the higher rates are about to break more banks. We're watching these numbers coming in. The banks that the FDIC is not letting us know are really weak and didn't pass their stress tests. We're going to start listening, hearing them in the news. Listen for this. More will kind of start crumbling under the stress. I feel like it's kind of crumbling from underneath the structure. So urging caution here. So this kind of sums up the stock market yesterday. Hedge funds ramping up bets against the US stocks, as I just said, and the leverage gauge, because they're generally doing 100 to 1 or more. So all of the derivatives are being pulled in. So, and as you said, we're watching the yields fall because that has a huge effect on the market itself. This is the summary of what we're looking for oil. Who's afraid of $100 oil because that's what the target is? And it can very well reach that relatively soon here within the next month or so easily. So got a little bit on real estate, economy, and labor, still weak, as expected. This is everything that's going on between rising interest rates or creating rising in mortgage lending rates. It's very difficult and very expensive now to get loans. So this is going to have the same type of trickle-down effect that it did in 2008. We've got realtors and mortgage lenders facing a serious recession. So this is kind of how it toppled last time. They were the first line that started going down. The jobs started disappearing for mortgage lenders and in these industries. Realtors started having a really difficult time. Then it crossed into the builders. The builders have already prepared for this because they still remember last time. So we're going to watch this trickle down a little further. So moving on, this is actually regarding jobs. It says you applied for your dream job. Is the posting real? So what they're finding, and we were talking about this a couple of weeks ago, one of the largest platforms that they use for jobs is called Indeed. So on Indeed, they are a job search engine and then also for companies. But what companies were doing were posting 2 or 3 differently worded postings to try and get more candidates. So when they actually only had one job, they would post as if it were five or several. And so all of those got counted as available jobs, and it didn't actually exist. So this is starting to manifest itself as well in the labor market. We're going to watch some changes in the unemployment numbers, I'm suspecting, pretty quickly here. So we got a couple of other stories on the economy. So this is a global issue. We are watching also the German labor market um, slowing down. There's higher unemployment they're expecting coming in there. And food insecurity, which is basically hunger, is they're talking about how it remains elevated. This is also a global issue that will continue forward. So, as promised, I wanted to move forward with we have some cryptocurrency, fintech, and digital currency news. So, this one, it's more fintech, it's not directly cryptocurrency. So, these are banks PNC, TD America, and BMO. They're talking about adopting earned wage access and seeing whether smaller banks should do this as well. So, in short, what this is, EWA, as they call it, earned wage access, is basically they can pull their pay before they make it. So, they can small percentage. They're taking a loan in essence against what they haven't even made yet. So they haven't been paid, but they're looking at doing this EWA. It's another sign, in my point of view, of weakness and cracking, and this is also going to go bad. So this is a company that does this called Daily Pay, and they're also talking about the other banks they work with, namely Santander, TD Bank, BMO Financial, and other local ones. So I just wanted to bring this up, that this is the new thing. You can't borrow from your credit cards anymore because they're maxed. You start borrowing from yourself and your employer. And I think that's bad for both. So this is actually kind of exciting news, I think, here. MoneyGram, non-custodial wallet, and they are built on the Stellar platform. So those of you that understand cryptocurrencies, I know a lot of you support XRP, but this kind of opens the door. And I would like to see more companies competing because that's how we get good services. So they're going to be doing basically what they did with money and currencies, changing them, and then just being a flow through to other countries, other currencies, and also cryptocurrencies built on a Stellar network, which was built a long time ago to be kind of like an ATM banking platform. So in this story, it's JP Morgan's digital bank blocking customers from buying crypto. The real story is they're only blocking them from buying using debit cards because they're saying it's a scam. So innovation, in my mind, is not going to come from JP Morgan or central banks because, quite frankly, they're not smart enough. So what they're going to do instead is do what they do best. They're going to wait for innovation coming from other companies and they'll buy it or steal it. So I want to move on to Andreessen Horowitz. Okay, the story on this is the one that I think we need to watch. So they're talking about a misnomer. This he says, well, money is much older than software, and really what he means is currency because money is gold and silver. Anyway, talking about moving the payments around the world. So I want to go over a couple of things that they had in their article because to me, these are danger signals and things we need to flag. So they want to open multi-country payment rails and expand embedded payments to more countries. And they're going to let software and artificial intelligence handle the quote unquote know your customer. They also call that KYC and know your business. And that's basically how they're going to roll in the biometrics and artificial intelligence. And they're talking about how they need to fight artificial intelligence fraudsters with their securities. That's how they're going to pull this in with all of the things that are going to basically be, they're going to cut the freedom with this. So, want to watch this. They've got several of the payment transfer services in other companies, namely the companies they will be looking towards are Wise, that's in the UK, Boku, B-O-K-U, Berlin, Payrails, Stripe, which you may be familiar with, as well as Affirm. And Affirm is the latest companies that's been doing loans so you could pay with a loan for your Starbucks. Okay, moving on. We've got this other, I think this is also another part of it. NVIDIA is launching a partnership with artificial intelligence, AI powered 5G network. So, this is the new one they're pushing for all the cell services to run on. It's got EMF issues and there's a lot of security issues with this as well. So, they're really kind of shoving this down our throats with the 5G. Let you read the background on this. It is with Japanese companies, Docomo and also Fujitsu. So if you take a moment and you like this material, I would appreciate that. And I've got one lava update I would really like to bring out before I let you go. We were talking about the Nord Stream. So they brought up that in this article, and I can let you read this, but a CIA run attack was aimed at Germany. And basically, what they were getting at is that we're kind of punishing Germany for continuing to use Russian oil. So, anyway, I thought that was an interesting story. Let me know what you think of this in the comments. I appreciate all of you being here. Wish you a green trading day, just a wonderful day in general. And as always, my friends, until I see you again, stay free.